Okay, hello Seb. This is the explanation for the investments for 50,000. If you start with 50,000 and it ends in 55, then it grew 10%. That's going to be the objective for this investment. Now, if you start with 50,000 and it gains more than 10%, then you might be motivated to give some of the winnings to me. For example, if 50,000 grew 12%, then it would be 56,500. And that would be 1,500 greater than the 55,000 of the 10%. So meaning if you grew 12%, not just 10, then there's going to be some success fee over there. That's what the first page means. For example, 50,000 at the start becomes 56,500, then there's an excess of 1,500 over the expected 55. So you keep half the 1,005 and you award the other half to me. Otherwise, you don't have to pay any advisor fee to me. So that's going to be just purely success fee. That's the arrangement I'm proposing. Now, some of these investments are long term. Uh, you're going to invest the 50,000, some of it for 3 years, some for 5 years, some for 8 years, some for 10 years, some for 12 years. And that's how you can achieve, for some of them, 3%, 8%, 10%, and 12%. Um, the more you can invest the money, the higher is the growth rate that you can target. So if you want money to be growing 12%, then you have to allow it 12 years to move up. It's going to move up 12% a year. Even if there's a zigzag, at least it's going to go up 12%. Now, if you only have 10 years, then you have to target a lower rate of growth. And if it's 8 years, you target lower or 8% rate of growth. So it's like angle of attack. If you're targeting 20%, okay, your money will grow up like that. If you're targeting just 8%, okay, then it's slightly lower trajectory. And there's also a zigzag there. But your money will get there, traveling 8% per year, some at 10, some at 15, some at 20. So it's a mix of several growth rates that you're targeting. So the sample portfolio that we're looking at is $50,000, 5,000 in bonds, 5,500 in financials, meaning banks, Australian banks, $7,500 in a fund called Equity Yield. It earns about 10% a year. Then 9,500 in a fund called Small Caps. It earns 9% per year. Then there's the 11,000 that you can place in technology stocks in the Australian Stock Exchange, and then their track record is 20% per year. Meanwhile, you'll put $11,500 in resources, meaning gold, silver, copper, and that has been growing at approximately 19% per year. Okay, so if you put 50K in all these various funds, then your investment may grow after 5 years to be 95,252 after 5 years. All right, this would be because it's trying to grow 13% per year. That's why it's aggressive. But it's because the track record has been 20, 19, 10, and 9. So this allows you to you for your money to follow the track record of those good technology stocks in Australia, as well as small caps, equity yield, and resources, right? So those are the growth areas of the economy, and your money has to be riding those trends. So if all goes well and your money grows 13% per year, then the 50,000 can become 95 in 5 years' time. But you have to patiently wait for the 5 years, all right? Now, part of it will be in bonds. Here's the next tab. The bonds portion, I have checked, it's been growing 5% a year net portfolio yield, minus taxes. Then the financial sector investments, they have been growing 5.7% per year. The index of bonds has been growing 6% per year. That's fairly good. That's actually very good. And then let's look at equity yield. Equity yield funds have been growing 10% per year on the index. The fund itself has grown 6.4, meaning it's underperforming. Only 6, it's supposed to grow 10. Eventually, it'll have to be managed better so it approaches the 10% per year. Okay, that's the equity yield fund. And if you want to see the website of the fund, it's there on the top of the Excel sheet. Beta shares, equity yield maximizer fund. Now, the next fund is the small caps, which is the beta shares fund for Australian small companies. And this fund has been growing 9.6% per year for the past 3 years. The accumulated small cap index for the Australian Stock Exchange has grown 8% per year for the past 3 years. Actually, last year, 2020, it went up 52%. But that's just 1 year. So the average for all the past 3 years has been 9% for that fund. Next is technology. Technology stocks have gone up 21% per year for the past 5 years. That's 5 years of 21% per year. And then the resources, 20% per year on the index, but 19.8% on the fund itself. That's close. That's close. Okay, so if we go back to the sample 50K, the sample 50K is the fund of 50,000, and then we would find a stockbroker that would be able to do this. I guess that would be it. I think this will go well if we find a correct stockbroker. Okay.